Hi guys, Robert Rivera here with the Rivera Trading Group in association with Team Take Profits. And today I want to take a minute and talk to you about supply and demand. Supply and demand are areas in the market where price has left so quickly that it has left gaps in the orders of buying and selling. The market always seeks to be efficient. It tries to balance buyers and sellers, and so when the price drops really fast and buyers are not able to take part of the operation, it is considered an area of supply. You find that in all time frames. It doesn't really matter what time frame you're in. You're going to see these areas of supply and demand. Same thing on demand. When price bounces from an area so quickly that price disappears, and you see this especially when you have a catalyst such as news. Price takes off and leaves a gap. Whether you use smart money concepts or other those consider order blocks and stuff like that, when price returns to those areas, it is very likely to bounce again or to reject again that area because it has left way too many orders. If you think about it, if a bank is trying to move billions of dollars in the market, they can't throw all the orders in at once because there are not going to be enough people to absorb those orders. And so if there aren't enough people to absorb those orders and they throw in the money into the market, they're competing against themselves. They don't want to do that, okay? They want to provide a catalyst of movement, and then the retail trader gets in and moves price to where they want to do so. So in other words, if they have billions of dollars to move, they only buy them in chunks. And so they put in an order, there goes price, and then they have to wait or manipulate the market to get price to come back so they can put in the other order or the second or third order of orders that they want to put in at that price, okay, to do it well for their clients and for themselves. And so, again, these areas where the market bounces from or rejects are areas where there is a high probability of success for you as a trader if you follow certain rules. There are certain confirmations that you need to have in order to take advantage of it. So one of them, for example, is no matter what time frame it is that you are looking at, and you need a candle that goes in your favor. Once price returns to supply, for example, you need a bearish candle. Once price returns to demand, you need a bullish candle. And then you need a plan on how to take it after that. There are people who take limit orders, right? They put limit orders at the first entry of demand or supply, and that can work, and it works probably with significant regularity for them to take advantage of it, but it is high risk. And the reason why it's high risk is because perhaps the catalyst that moved the market has been already absorbed by the market, and now when price returns to that area, it's just going to go right through that zone. And so that could prove to be a loser. However, it is usually the best entry because you can get an entry at the wick. And my preference and what I teach our team is to wait for the confirmation candle that goes in their favor and then take the break of that candle up. Let me give you some examples for the chart and then we'll close it from over there. Take care, guys.
Hi guys. So on supply and demand, you're looking for areas in the market where price has dropped suddenly without buyers or sellers being able to interact in the market. The market likes to be efficient. In other words, there should be a balance between buyers and sellers. And in this downtrend right here, you can see how there are areas where price drops so quickly that buyers could not get in on the action. The market frowns on this and looks to create a balance of these orders by coming back and mitigating them, as we call it. Now, when price returns to these areas, we don't know which is the one that it is going to mostly be interested in. It could stop here, it could stop here, it could stop here. All of these will be considered supply because supply is at the top and demand is at the bottom. You want to focus on trading with the trend rather than going counter trend. If you're a scalper, you could probably still scalp it, not a problem. But if you want a higher probability and a higher rate of success, then you should always go with the trend. In this case, price is trending down. This is on the 15-minute chart. Price is trending down and it is leaving gaps along the way. These gaps right here okay, these areas where price did not come back to mitigate this area where it dropped from, are considered high probability because price went up to go down, up to go down, up to go down. We don't know, again, where it may stop, but we know that it is going to make a hesitation. Here is an area of friction, an area of friction, an area of friction. So last night, this is gold, and I marked this area here, and I was in anticipation to see what price would do when it returned. And this is what we see as price makes its way back up here in just a minute. There it is. Okay, it touches, it rejects, and this is my signal for entry. If you go in on the 5-minute, you have an even cleaner and clearer entry, and you have a shorter stop loss. But this works in all time frames. It doesn't really matter what time frame you go in. This works in all time frames. I usually go for a 1-to-1 at the break of the low. Okay, something like so, something like so, something like that. It's close, 1-to-1, and it's paid immediately. What, 2 bars there? I'm not sure if it went below that. That might have been it. That's 52 pips, folks. Well, that's 40 pips right there. Let me see if I get another one. There it is. There it is. Okay, that right there is a very clean 40 plus pips and an easy sell, an easy win. These opportunities occur in the market quite frequently, and it is a high probability because, again, the market seeks to balance this inequality. They call them inefficiencies. And again, it's an imbalance in the market when it leaves these kind of gaps. Okay, this is just a brief instruction on supply and demand. If you want more information, you can join us at Team Take Profits. We have classes twice a week. We trade live 4 to 5 days a week, and we instruct on how to take these, and we provide the setups also on a nightly basis. Take care, guys. God bless you.